Ever pondered how your money can magically multiply over time? Well, it isn't exactly magic, but rather a fascinating phenomenon known as money growth. There are primarily two ways this growth can occur: through the power of compounding and the allure of moonshots. Think of compounding as a snowball rolling down a hill. It starts small, but as it rolls further, it gathers more snow, growing larger and faster with each turn. That's how compounding works. Your money grows, not just from your initial investment, but from the earnings it generates over time. On the other hand, moonshots are like hitting a home run in a baseball game, where your money takes a massive leap in value in a short period. They're often associated with high risk, high reward investments, where the potential for growth is vast, but so is the risk. So, are you ready to dive into the world of compounding and moonshots? Imagine a snowball rolling down a hill. It starts small but grows larger as it picks up more snow. That's compounding for you. Now, let's get into the heart of it. Compounding, in its simplest form, is the process where the value of an investment increases because the earnings on an investment, both capital gains and interest, themselves earn interest. It's kind of like a snowball effect, where your wealth could potentially grow faster and faster as time goes on. Let's break it down with an example. Say you invest $100 with an annual interest rate of 5%. After the first year, you'd have $105. But here's where the magic happens. In the second year, you're not just earning interest on your initial $100, but also on the $5 interest from the first year. So, at the end of the second year, you'd have $110.25. This might seem like small change now, but over time, this can add up to a substantial amount. This brings us to the concept of the time value of money. The idea that a dollar today is worth more than a dollar in the future because of its potential earning capacity. This core principle of finance holds that, provided money can earn interest, any amount of money is worth more the sooner it is received. So, what does this mean for you? Well, the sooner you start, the better. The longer you allow your investments to compound, the larger they can grow. Like planting a tree, the best time to start was 20 years ago, but the second best time is now. And remember, while the prospect of doubling or tripling your money quickly with moonshots can be alluring, compounding is a proven time-tested method for growing wealth. It might not seem as exciting or as fast, but it's consistent. Compounding, then, is a slow and steady race. But what about moonshots? Aren't they faster? Picture a rocket blasting off into space. That's a moonshot. It's all about making a big, quick leap. Now, we're not talking about literal rockets here. In the world of finance, a moonshot refers to an investment that has the potential to yield extraordinarily high returns in a short period of time. Imagine investing in a startup that becomes the next Google or Apple. That's the kind of leap we're talking about. It's like buying a lottery ticket, except the odds are slightly better. Moonshots are the dreams that venture capitalists and angel investors chase after, hoping to strike gold. But let's unravel the layers a bit. Moonshots are inherently risky. For every successful moonshot, there are countless failures. These investments are often in industries that are still in their infancy, where the rules of the game are yet to be defined. Think about the early days of the internet, or the current landscape of cryptocurrency. The potential for growth is astronomical, but so is the potential for loss. Moonshots are not for the faint-hearted. They require a deep understanding of the industry, a keen eye for innovation, and a high tolerance for risk. They also require patience. While the promise of quick returns is tempting, the reality is that most moonshots take time to mature. Remember, the rocket that's blasting off to the moon doesn't get there overnight. It has to navigate through turbulence, adjust its trajectory, and sometimes, even survive a few explosions. The journey is fraught with challenges and uncertainties. But if the rocket manages to land on the moon, the rewards can be staggering. Moonshots are a high-stakes game of chance. They can catapult you to financial heights that compounding can only dream of. But they can also leave you with nothing. It's a gamble, a roll of the dice. But for those who dare to dream big, who are willing to take the risk, moonshots can be a thrilling ride. Moonshots can lead to great heights, but they come with their own set of challenges. So, slow and steady compounding or quick and risky moonshots, which one should you choose? Well, let's delve into the pros and cons of both. Compounding, on one hand, offers steady growth over time, like a snowball rolling down a hill, gaining momentum and size. It's less risky, but requires patience and time. On the flip side, moonshots promise quick, substantial returns. Imagine launching a rocket straight to the moon. But of course, such high returns come with high risks. The rocket could also explode mid-flight. Your choice between compounding and moonshots should be guided by your financial goals, timeline, and risk tolerance. Are you saving for retirement decades away, or hoping to make a quick buck? Are you okay with potentially losing your investment, or would you prefer a safer route? The key is to understand your financial goals and risk tolerance before making a decision. Remember, there's no one-size-fits-all solution in finance. Money growth might seem complex, but it doesn't have to be. The beauty of financial growth lies in its simplicity, really. We've taken a journey through the world of compounding and moonshots, two distinct paths that can lead to the same destination, wealth accumulation. The power of compounding, as we've seen, is slow and steady. It rewards patience and consistency, steadily growing your wealth over time. It's like planting a tree. You water it, care for it, and in time it grows, bearing fruit year after year. Moonshots, on the other hand, are all about the big leaps. They're the high-risk, high-reward ventures that can catapult your finances to new heights. It's a gamble, but sometimes, taking that leap of faith can pay off in ways you'd never imagine. In the end, the path you choose to walk is up to you. Remember, whether it's compounding or moonshots, the choice is yours. Your money, your rules,